Hey everyone, and welcome to our deep dive on Home Depot. Today we're going to figure out if this home improvement giant is a good fit for your investment portfolio. So we're going to cover a lot of ground, from their financials and market dominance to their forays into AI and that massive acquisition they just made. Should be interesting.
Yeah, it's fascinating how Home Depot went from, like a simple hardware store to this global powerhouse. It's not just hammers and nails anymore. It's tech investments, expanding services, even sustainability.
So like how big are we talking? Like just how big is Home Depot?
Well, they're the largest home improvement retailer in the U.S., over 2,300 stores across North America,
Uh,
U.S., Canada, Mexico, the whole shebang. And get this. They have a massive workforce of over 463,000 people, which makes them the sixth largest U.S.-based employer globally.
Whoa, that's a huge economic impact right there. Okay, so we know they're big, but how have they been handling these recent economic challenges? With inflation and all the supply chain issues and everything.
Well, despite all that, Home Depot has shown some serious resilience. In the third quarter of last year, their sales only dipped by 3% year over year, which is pretty impressive, all things considered.
So they're holding steady. What's the secret?
Well, it's a few things. They have a diversified supplier network, so they're not too reliant on any one source for their products, and they've really strategically expanded their business to cater to both DIYers and professional contractors, gives them a buffer against those economic swings.
Yeah, that makes sense.
Yeah.
Now, let's talk innovation. I hear they're doing some really interesting things with AI and e-commerce.
Yeah, they're definitely not just sitting back counting their cash. They've invested a lot in AI to improve their supply chain management, personalize the customer experience, even help with things like inventory forecasting, and their e-commerce platform has been a real game changer, especially during the pandemic when online shopping surged.
So not just a brick and mortar dinosaur, they're really embracing the technology to stay ahead.
Exactly. Like they have this augmented reality app now, lets you visualize renovation projects in your own home.
That's pretty cool.
Yeah.
Okay, let's dive into the financials. How are the numbers looking?
2023 revenue was a whopping $157.4003 billion, with a net income of $17.105 billion, and their market capitalization is over $424 billion. That makes them the 23rd most valuable company in the world.
Wow. Okay, those are some serious numbers.
Mm.
What about their stock performance? Is Home Depot stock a good buy?
Well, their stock price has doubled in value in just 5 years. Pretty impressive. And analysts are pretty optimistic about their future growth.
What's making them so optimistic?
Well, one key factor is their forward price to earnings ratio, which is currently 23.
Okay, for those of us who aren't financial wizards, can you break that down for us? What does that mean and why is it important?
Sure. The price to earnings ratio, or PE ratio, it's a way to measure how much investors are willing to pay for each dollar of a company's earnings. A higher PE ratio usually means investors expect higher earnings growth in the future. So in Home Depot's case, that 23 suggests analysts are pretty bullish on their potential.
So even though their PE ratio is higher than the market average, analysts still see it as a potential deal because they believe Home Depot is well positioned for growth.
Exactly. They're factoring in market dominance, innovative initiatives, strong management team.
Speaking of growth, let's talk about their recent acquisition spree. They just dropped a cool $18.2 billion on SRS distribution. What's the story there?
Well, SRS Distribution is a major player in the roofing and building supplies market. They mainly work with professional contractors, so this acquisition expands Home Depot's reach in that segment, strengthens their relationships with those key customers.
So they're doubling down on the professional market. Is that a smart move?
It could be. Professional contractors make up a big chunk of Home Depot's sales, as this gives them an even stronger foothold. It's a strategic play to capture even more of that business.
And this isn't their first acquisition rodeo, is it? Didn't they acquire HD Supply a few years back?
You're right. They got HD Supply in 2020 for $8 billion. That one focused more on the maintenance, repair, and operations market, serving industrial and institutional customers. So they're strategically diversifying their revenue streams.
They're not afraid to make big moves to solidify their position. Sounds like they have a pretty clear vision for growth.
Absolutely. They're not just sitting on their laurels. They're actively looking for ways to expand and grow.
Okay, so we've covered their size, financial performance, innovation, acquisitions. What about their services business? I know they've been expanding beyond just selling products.
Yeah, that's another area where they've been making smart moves, increasingly focusing on providing installation services, home repairs, even things like kitchen remodeling.
Yeah, that makes sense. It's all about convenience these days. People are busy. They're willing to pay for someone else to handle those projects.
Exactly. And it allows Home Depot to grab a bigger share of the customer's wallet. Instead of just the materials, they can manage the whole project from start to finish.
And I'm guessing those services come with higher profit margins than just selling the products.
You got it. They can charge a premium for their expertise and labor. Definitely helps boost that bottom line.
Okay, this is all sounding pretty good so far. But before we get too carried away, let's talk about the potential downsides. What are some risks investors should be aware of when it comes to Home Depot stock?
Well, like with any investment, there are always risks. One concern is that the housing market is cyclical. If interest rates go way up, or there's a slowdown in new home construction, that could definitely hurt Home Depot's sales.
Yeah, I can see that. People are less likely to invest in home improvements if they're worried about the economy or the value of their homes.
Exactly. And then there's the competition from online retailers like Amazon. They're selling more and more home improvement products these days.
So the competition is heating up. What else could affect Home Depot's performance?
Well, there's always those economic factors that are out of their control, like recessions or supply chain disruptions. Those can hit the bottom line pretty hard.
And of course, there's the potential impact of climate change. Extreme weather events could damage their stores or disrupt their supply chains, leading to higher costs and lost revenue.
Ah.
Okay, so there are definitely some risks to keep in mind, but overall, it sounds like Home Depot has a lot going for it. Strong financials, market dominance, innovation, a growing services business. They're even making an effort with sustainability.
Yeah, you forgot one thing.
Oh, what's that?
Their dividend policy and share buybacks.
Oh, you're right.
Yeah.
That totally slipped my mind.
Yeah.
Okay, so let's talk about their dividend policy first. What's so great about it?
Well, Home Depot has a great track record of paying dividends and steadily increasing those payouts for years, which is a big draw for investors who want that passive income.
Yeah, it shows they're confident in their future earnings and committed to giving back to their shareholders. Now, what about those share buybacks? What's the deal with those ads?
Share buybacks are another way for companies to return value to shareholders. When they buy back their own shares, it reduces the number of outstanding shares, which can boost earnings per share and increase the value of the remaining shares.
It's like saying, we believe in ourselves so much we're going to invest in ourselves.
Exactly. Signals confidence in their future prospects. Okay, to understand Home Depot's success, we got to go back in time a bit. Back to their humble beginnings.
All right, so how did this Home Depot empire get started?
It all started with Bernie Marcus and Arthur Blank back in 1978.
Okay, so tell me about these two. What was their vision? What made them think they could create this different kind of home improvement store?
They imagined these huge warehouse-style stores with tons of products at competitive prices. They wanted to cater to both DIY enthusiasts and professional contractors, which was a new approach back then.
And clearly it resonated with people.
Well, absolutely. Opened their first 2 stores in Atlanta in 1979. By 1981, they were listed on the NASDAQ. Meteoric rise.
That's incredible. From a couple guys with a dream to this global retail powerhouse. Okay, so we talked about financials, innovation acquisitions, services, their history. But what about sustainability?
Yeah.
You know, ESG factors. It seems like more and more investors are considering those when making decisions.
You're right. And Home Depot has made some notable strides there. They've implemented programs to promote energy conservation and sustainable forestry practices. And they're addressing the shortage of construction workers through training initiatives.
So they're thinking about their impact on the environment and society. That's great to hear. All right. I think we've covered a lot here. Let's do a quick recap of the pros and cons of owning Home Depot stock before we wrap up this part of the deep dive.
Sounds good. On the plus side, you got strong financial performance, dominant market share, those innovative initiatives, their focus on both DIY and professional customers, and that potential for long-term growth, plus a solid dividend policy and share buybacks. All good signs.
And on the downside, what should investors be wary of?
Well, there's that potential for economic headwinds, the increase in competition from those online retailers, and the cyclical nature of the housing market. And like we said before, there are always those external factors like climate change and supply chain issues. Those can impact their performance.
Okay, so there are some risks to consider, but it seems like overall Home Depot has a lot more going for it than against it. I'm really impressed with what I've learned today.
Yeah, me too. They seem like a really well-managed company, adapting to the changing retail landscape, making smart moves to set themselves up for success.
I agree. I'm really interested in those strategic acquisitions, especially that SRS distribution deal.
Yeah, for sure. Shows their ambition to grow beyond their core business, tap into new markets.
It'll be fascinating to see how that plays out over the next few years.
Welcome back to part 2 of our deep dive into Home Depot.
You know, it's amazing to think about the ripple effect. a company like Home Depot has on the economy.
For sure, their massive workforce, over 463,000 people, makes them the sixth largest U.S.-based employer globally, a real economic engine.
And it's not just jobs within the company itself.
Exactly. It's the
Yeah.
whole network. Stores, distribution centers, suppliers.
Hmm.
Creates jobs in all those related industries. Construction, manufacturing, transportation, you name it.
Right, and then they're spending on inventory marketing technology.
Hmm.
All that further stimulates the economy.
Not to mention the taxes they pay, funding essential government services.
Yeah, they're a major player in the economic well-being
Uh,
of both the U.S. and Canada.
Speaking of their impact, we talked a little bit about their forward PE ratio of 23 earlier, even though it's higher than the market average. Many analysts still see Home Depot as a potential bargain.
Can we unpack that a little more? Why are they so optimistic about Home Depot's future growth?
Well, they're banking on Home Depot's ability to keep growing its earnings at a healthy clip. They see that dominant market share. There's innovative strategies, and their commitment to returning value to shareholders through those dividends and buybacks, all positive signs.
So they're looking beyond just the current numbers and considering the bigger picture.
Exactly. But it's important to remember, Home Depot's not operating in a vacuum. They've got some stiff competition from rivals like Lowe's and online giants like Amazon, who are trying to muscle into the home improvement market.
Right, so there's always a chance. That competition could eat away at their market share or put pressure on their profit margins.
Definitely something to watch, but I think Home Depot has proven time and again that they're a well-managed company, good at navigating those challenges and consistently delivering value to their shareholders. They seem ready for whatever comes next.
Before we wrap up, I want to go back to their commitment to sustainability for a second. We talked about ESG factors, but I think it's worth highlighting how these efforts could benefit investors.
Absolutely. ESG is a big deal these days. More and more investors want their investments to align with their values. So Home Depot's focus on things like environmental sustainability, social responsibility, and good governance makes them a more appealing option.
Right, so it's not just about doing good, it's about mitigating risks and enhancing long-term value.
Exactly. By tackling things like climate change, supply chain ethics, workforce diversity, they're creating a more resilient and sustainable business, which benefits their bottom line and their shareholders.
So we've covered their financials, their innovative approach, their history, their services, even their impact on the economy and ESG principles. What stands out most to you about Home Depot?
Honestly, their ability to adapt and evolve. They went from a brick-and-mortar hardware store to this tech-savvy, service-oriented, sustainability-minded company.
I know it's remarkable how they've managed to stay on top, despite how much the retail landscape is changing.
It really says a lot about their management team, their corporate culture, their ability to anticipate and respond to what consumers want.
I totally agree. And I'm really intrigued by those strategic acquisitions, especially that recent one with SRS Distribution.
Yeah, it shows their ambition to grow beyond their core business, tap into new markets.
It'll be interesting to see how that plays out.
Okay, before we move on, I have a question for you.
All right, hit me.
So we talked about how Home Depot depends on the housing market, but what about the sharing economy? Think Airbnb and VRBO. They're changing how people use their homes.
Interesting. How do you think that could affect Home Depot?
Well, if fewer people are buying homes as their main residence and more people are using them as short-term rentals, it could shift the demand for home improvement products and services. It's something to think about when you're evaluating their long-term prospects.
Makes sense. So demographic shifts, changing lifestyles, emerging technologies, all have the potential to influence Home Depot's future. They'll need to stay nimble and innovative to maintain their success.
Yeah, it really makes you think. Investing isn't just about the numbers. It's about understanding the big picture, all the different forces at play, and finding those companies that are ready to navigate all the changes.
Absolutely.
Okay, so after all this, what's the final verdict? Portfolio powerhouse? Or are we passing on Home Depot stock?
Well, that's the million-dollar question, isn't it?
Yeah.
And ultimately, it comes down to the individual investor. What are your goals? Your risk tolerance, your time horizon? Very diplomatic. But come on, what do you think? What's your gut feeling on Home Depot?
All right. Based on everything we've talked about, I'd say they have a lot going for them. That history of strong financials, the dominant market share, they're good at innovating. And they seem to be making those smart strategic moves, setting themselves up for more growth, plus that commitment to ESG and their dividend policy. Attractive for a lot of investors.
So you're leaning towards buy.
Leaning, yes. But as always, do your own research. Dig into those financials. Look at the risks. Maybe talk to a financial advisor. before making any decisions.
Always good advice. Okay, before we wrap up this deep dive, I want to hear from you, our listeners. Head over to our YouTube channel and let us know what you think about Home Depot. Are you bullish on their future, or are you skeptical?
Yeah, and tell us what other companies or industries you want us to explore in future deep dives.
Exactly. Leave us a comment. We love hearing from you. And if you enjoyed this episode, don't forget to subscribe to our channel for more deep dives on companies and investment strategies. Until next time, happy investing.